Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day.
What the world needs now is people who see flight a little bit differently. Because seeing a better connected world isn't far in the future. We're building it now. GE, building a world that works.
An Oxfam survey revealed that the income of 84% of Indian households dropped in 2021. And in contrast, the rank of billionaires swelled from 102 to 142 during the same period. Clearly, the pandemic wasn't that bad for those with a cushion of wealth. And the effect of this trend was clearly visible in key sectors of the economy. In auto sector, the sale of two-wheelers nosedived while the SUVs were selling like hotcakes. FMCG is struggling due to weak demand, but the aviation sector is seeing a jump in traffic. The divergent performances in various sectors is laying bare the K-shaped recovery in the Indian economy. In our next segment, we take a dive into key sectors like FMCG, automobiles, real estate and aviation to find out how exactly is Indian economy trying to get on its feet.
Many who had their jobs, incomes, and savings ravaged by the pandemic are still trying to recover. Retail inflation, which was making their lives more difficult, eased marginally in May after touching an 8-year high of 7.79% in April. But it was still above the RBI's tolerance band of 2 to 6% for a fifth month in a row. Most companies too are feeling the heat of soaring input costs. Hindustan Unilever chairman Nitin Paranjape last week said that India is currently going through probably the most difficult economic situation. He also said that the company would continue to increase prices even as FMCG market growth rates moderate and volume growth rates become negative in the short term. A look at the sales of products across different price ranges throws up a disturbing trend. HUL, Dabur India, Asian Paints and Parle products have all seen consumers buying cheaper and smaller packs. Meanwhile, according to Bloomberg, HUL saw its premium portfolio grow at twice the pace as the rest of its portfolio in 2021-22. Marico Limited's premium personal care range also grew in high double digits in FY22. HUL, Britannia and Parle products get 30%, 55% and 70% of their business respectively from 1, 5 and 10 rupee packs. As a result, FMCG firms have opted for making products smaller while still maintaining the same price, a phenomenon called shrinkflation. A Nielsen IQ report has also found that the FMCG industry saw a decline in volume in the January-March period. In fact, rural India witnessed a 5.3% fall in volume, the highest consumption slowdown in the last 3 quarters. The report said that a decline in consumption was echoed across all zones and the town classes, but was more prominent in rural markets.
There is a trend towards down trading to smaller packs, holding back some of the non-essential sales, purchases, and focusing on essential goods. The positive side is that we see this changing quite quickly as well, with the expectation of strong monsoons or on-time monsoons, with the government taking a lot of initiatives around basically reducing the excise duty on fuel, providing subsidy on gas cylinders, and increasing fertilizer subsidy. The expectation is that rural incomes should start to go up, along with the food price. The rural markets getting higher food prices as well because of overall food price inflation. So all of that should basically put rural back on track, and we should start to go back to a V-shaped recovery. But clearly right now there is a K-shaped recovery.
Meanwhile, a national daily reported that 12 million passengers took domestic flights in May, almost 6 times the number for the same month last year that was hit by the second wave of COVID-19. ICRA said that domestic air travel in May was only 7% lower than pre-COVID levels. ICRA also said that international air traffic has surpassed pre-COVID levels by around 24%, with fares seeing a spike. The number of domestic and international flights operated by Indian Airlines is also back to pre-COVID levels. All of this has come against the backdrop of several rounds of airfare hikes due to all-time high jet fuel prices. Let us now gauge the trend in the auto sector. The Federation of Automobile Dealers Associations has said that passenger vehicle retail sales in May 2022 were 11% higher compared to the pre-COVID month of May 2019. But two-wheeler sales in May 2022 were down 13.91% compared to May 2019. However, according to FADA, the two-wheeler segment has seen a slight improvement in overall sales when compared with April this year. According to Maruti Suzuki India Executive Director Shashank Srivastava, sales of SUVs and MPVs are expected to jump 63.93% in FY23 from FY19.
Two-wheeler segment is more price sensitive and consumers has a higher sensitivity to the price of the vehicle as well as its operational cost in terms of the fuel prices. So both went negative, particularly post Russia-Ukraine issue and commodity prices also impacted the vehicle prices. This segment witnessed much slower recovery compared to the passenger car segment, which reported a very strong recovery despite semiconductor issue, and there has been a huge waiting period. Almost more than 500,000 vehicles are under order books of these car makers. This K-shaped recovery trend would continue for next 1 to 2 quarters.
The real estate segment also showed a divergent trend. According to Anurag Research, there has been a 230% jump in new launch supply in the luxury real estate segment, priced over 1.5 crore rupees across India's top 7 cities in Q1 2022 as against Q1 2020. Out of the overall housing sales in the top 7 cities in Q1 2022, the luxury segment's share was nearly 12% compared to about 7% back in the pre-COVID period of 2019. Anurag Research added that before COVID, the affordable and mid segments were the most in demand categories. However, given that the pandemic affected the affordable buyer class the most, sales in the category went down from their earlier peak. Clearly, the divergent performances across sectors have laid bare the K-shaped recovery in the Indian economy. The pandemic seems to have no effect on the affluent class, which continues to splurge, while those at the bottom of the pyramid don't have much to spend. A good monsoon, enhanced subsidy, and the excise duty cuts on fuel might help. But the war in Ukraine might not end anytime soon. And RBI Governor Shaktikanta Das has said in a recent article that the retail inflation rate is likely to remain above the top end of the central bank's mandated target band until December. This begs the question, how quickly will the shape of economic recovery change for the better?
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
The pandemic also reinvented philanthropy in India. Asia's richest man, Gautam Adani, last Thursday pledged to donate $7.7 billion to social causes. With that, he joins the global big leagues of philanthropists. But is the family philanthropy by ultra-rich Indians making the desired impact? And if so, in which areas? And are there areas that are not receiving enough attention? Should the billionaires be donating more to address funding gaps? And how can they ensure their wealth makes a mark?
Asia's richest man celebrated his birthday a bit differently this year. To mark his 60th birthday, Adani Group's chairman Gautam Adani and his family, whose net worth is estimated at $98.1 billion by Forbes, have pledged to donate 60,000 crore rupees or $7.7 billion. The donation will be managed by the Adani Foundation. With this, he joins the ranks of billionaires like Mark Zuckerberg and Warren Buffett, who have committed large parts of their wealth for philanthropy. Philanthropist Azim Premji said this should set an example that entrepreneurs can try to live Mahatma Gandhi's principle of trusteeship of wealth at the peak of their business success. Indeed, the average age of giving in India is dipping every year and stands at 66 now. In FY21, Premji donated $1.3 billion or Rs 9,713 crore to charity. His foundation has an endowment estimated at $21 billion. The family of HCL Technologies founder Shiv Nadar was the second biggest donor. Adani's pledge is almost half of what Bill Gates and Melinda French Gates donated to their foundation in 2021, while the former couple's total donations are valued at $74.6 billion. Jamsetji Tata, who set up Tata Trusts, is the most generous individual of the last century, with total donations of over $102 billion at current value. Private giving in India stems from four sources: foreign, corporate, retail, and families. CSR, family philanthropy, and retail giving account for approximately 84% of overall private giving, with foreign contributions making up the rest, according to the India Philanthropy Report 2022 by Dasra and Bain and Company. Family philanthropy overall forms about one-third of total private giving and is expected to grow at a robust 13% per year until FY26, driven by increasing wealth and a rise in the number of technology entrepreneurs. Family philanthropy has fewer constraints than other sources, enabling a broader impact on the social sector. These donors have a greater ability to innovate, influence public policy, build institutional capacity, and experiment with new forms of funding. They can also go far beyond grant making, as most funders come with extensive and technical knowledge in their respective fields and have deep networks across functions and industries.
CSR is somewhat regulated in the sense that, I have to give a report, I have to show impact in that near term. Hence, it does not lend itself well to long-term, deep-rooted, sustainable changes. Whereas family philanthropies, if you look at them, they have the freedom to bring about very long-term strategic changes, right? Tata Trust, for example, their core focus is always what is the change we can bring about at scale, which is long-term and has measurable impact, not on a yearly basis, but in decades and in centuries. So I think family philanthropies, definitely they don't go down the drain. First time entrepreneurs come in and they say that I want to pledge 50% of my wealth that I create. And they all think about it in a very structured way. Much like family philanthropies, they devise what is the change theory that they have. Yes, they work through NGOs, but they have a change theory in mind. Many of them, in fact, do it on their own. If you look at Azim Premji Foundation, also, it's the same thing. They are working across, probably 45, 50 districts across the country, where you're building institutions where education can be transformed, whether it is teacher training, whether it is building the, all the co-curriculars that is required, whether it's building the infrastructure, etc. I feel that definitely they are able to do. If you take the examples of foundations that operate at scale, there is definitely impact there. I take the example, go back to Jamshedji example again, because it took years for us to see what they've been able to do for us, right? Whether it is Tata Memorial, all the design institutions, educational institutions.
Of the three major sources of private giving, CSR is the most widely distributed across sectors, while family giving is majorly concentrated in education and healthcare, even as India lags in several other sectors. India also lags on gender equality indicators than on indicators related to health and education. Similarly, funding is concentrated in Tier 1 cities. Adani's donation will be utilized in the areas of healthcare, education and skill development, with a special focus in rural regions. India's ultra-rich could potentially increase their donations by 8 to 13 times if they can match the giving as a percentage of wealth of their UK, Chinese and US counterparts.
Roughly the total philanthropy pie in India, private philanthropy, is about $16 billion. What is given by families is close to $4 to $5 billion. As you think about the huge quantum of wealth, which has increased, let's say 5 years out, the full potential or achievable potential would be almost, out of a 50 billion, almost 20 billion. And frankly, CSR will track to the corporate profitability. But family giving, the wealthiest individuals, they can up the giving tremendously. And secondly, they have the intent. But I think that intent now needs to be backed with much bolder, faster giving. Two key aspects of how the giving materializes. One is, what is the duration? Family philanthropy can think in terms of decades. CSR cannot think like that. Retail giving wants to see immediate results, but family giving can get behind causes where the results can come in 5 years.
How the Adani family deploys its donation is also key. While a good number of family philanthropists engage with NGOs through grant making, not all NGOs can absorb scale funding of the sort offered by these families. Gautam Adani has said that 3 expert committees will be formed to formalize strategy and decide allocation of funds, with a plan to add 1 or 2 more focus areas in the coming months. Adani Foundation will have to build the right talent, enhance its institutional capabilities further, and develop strategies to drive changes in the targeted areas.
यार मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Individual donations jumped 43% during pandemic years. Meanwhile, during the same period, prices of crude oil also climbed drastically. According to Reuters, in mid-April 2020, the price of a barrel of West Texas crude went below zero, and sellers had to pay to get rid of it. It is beyond $100 now, thanks to the Russian war. Companies across the value chain, especially crude refiners, have seen material gains in tandem with record high prices of crude oil. Our next report throws light in companies that are likely to seize the most gains.
Despite the recent correction, crude oil prices still remain roughly 41% higher from pre-war levels. Brent crude, for instance, trades around $110 per barrel, relative to $78 per barrel in December 2021. As a result, prices of petrol and diesel have recorded a sharp climb in India, helping domestic refiners clock significant rise in their gross refining margins. This is evident from the Singapore benchmark GRM, which is a gauge of regional refining margins.
See, the Singapore benchmark refinery margin, which is a widely tracked benchmark in India, continues to be in excess of $20 per barrel. Historically, Singapore benchmark has typically on an average been around 6 or 7, mostly in most years. So in a way, the benchmark has almost tripled, especially in the aftermath of Russia-Ukraine crisis. So that is benefiting the oil marketing companies in India and also the refiners.
Experts predict these margins could remain on the higher end as the global supply deficit for refined products remains unmet.
As far as other Indian companies are concerned, which is refiners, things are turning out to be rather healthy for the refiners, although there are concerns on the marketing front. But as far as the refinery segment of oil marketing companies or any standalone refiner is concerned, they have a decent amount of returns because of very strong refinery margin environment. Also, India is able to source Russian crude at a discount to the market price, and which is also additionally adding the refinery margins. As far as standalone refiners are concerned, yes, they would be making a reasonable amount of refinery margin, because as I mentioned earlier, also refinery margin environment continues to be very strong, and that will be reflected in their numbers.
From the lot, analysts are especially bullish on Reliance Industries. According to Jefferies, RIL is a key beneficiary of energy inflation, with every $1 per barrel improvement in annualized refining margins adding an estimated $400 to $450 million to its consolidated EBITDA. On the other hand, the road ahead for integrated refiners remains bumpy. While shares of standalone refiners like MRPL and CPCL have soared up to 3 times so far this year, investors have exited counters of BPCL, IOC and HPCL. ICICI Securities, for instance, believes gains in refining margins are unlikely to make up for losses on the retail front. Estimated losses on petrol and diesel have risen to 10.5 rupees and 12.5 rupees per litre for Q1 FY23. We estimate that every $1 per barrel incremental GRM boost only compensates for 3 to 4 rupees a litre of retail fuel loss. That said, markets will seek direction from global peers today. Later in the week, investors will monitor the core sector output, manufacturing PMI, and auto sales data.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After the markets, let us move on to the ongoing political turmoil in Maharashtra. The ruling Maha Vikas Aghadi government led by Shiv Sena is in crisis as one of their own leaders, Eknath Shinde, has rebelled. Reports say that he is claiming the support of at least 40 MLAs. In the entire political drama, anti-defection law has come into focus. Our next report explains it in details.
In politics, defection predates Gayalal, the Haryana MLA who switched party thrice in a day in 1967. After finally securing his loyalty, senior Congress leader of the time, Rao Birender Singh famously said at a press conference in Chandigarh, "Gaya Ram, ab Aya Ram hai." Little had Singh known at the time that the phrase, with some changes in ordering of words, will turn into a cliche in Indian politics. About 18 years later, to curb defection, the Rajiv Gandhi government of the time brought the anti-defection law through the 52nd Amendment Act of 1985. This amendment is known as anti-defection law. An anti-defection law calls for disqualification of elected representatives if they switch political parties on the lure of executive office or other gains. The aim is to bring political stability and demand accountability from the legislatures. Under the anti-defection law, members of a political party can be disqualified and removed from the membership of the House if they voluntarily resign from the party after being elected or defy the direction or whip of the party leadership in the House. Independent lawmakers may also stare at disqualification for switching political parties. However, if 2/3 of members of a political party intend to shift to another party, the law exempts them from disqualification. In 2021, 12 out of 17 Congress MLAs jumped ship to join the Trinamool Congress in Meghalaya and were exempted from the anti-defection law. Despite the anti-defection law, political defections are a common phenomenon and related proceedings have been going on in various courts. The role of the adjudicating authority, usually the Speaker of the House, is under scrutiny in most of the anti-defection cases. There were several instances of delays in the disqualification process as the Speaker is not time-bound to decide on any case. For instance, during 2014 to 2018, multiple opposition MLAs in Telangana defected to the ruling TRS party and no action was taken by the Speaker against these defectors. Experts argue that the Speaker may not be the objective authority to decide on anti-defection cases. And also, the whip of a political party forces lawmakers to toe the party line and that undermines their judgment on important issues. This essentially kills inner party democracy. Given numerous loopholes, experts have urged the government to revisit and reform the anti-defection law.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
In this entire episode, 37 has become the magic number as it is the 2/3 of the Shiv Sena's total strength in Maharashtra Assembly, which is 55. That's all for today. For more news and analysis, log on to businessstandard.com. We'll be back tomorrow with our next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.